All right, listen, Tesla's valuation is, for lack of a better word, absurd. Every single quarter, Tesla needs to ramp and build a new factory of 500,000 cars that's completely sold out. Clearly, they're not doing this. You assume they ramp a new factory every 2 quarters, 500,000 car per year factory that's completely sold out, and you discount that back by 15%, you're talking about a $30 stock.
I think Tesla still is a $2,500 stock.
What is he smoking to get to his position on this? Gordon, you ever wake up in the middle of the night and say, oh my God, I've hated Tesla since 50 and it's at 1,000? Do you ever think, wow, I need to revisit, the way I think about things?
In this video, everybody's favorite Tesla bear gets destroyed on live TV, not by another stock analyst, but by the host who peppers him throughout the interview. Plus, why Tesla stock is going to $2,500 per share. And stick around to the end of the video for the most brutal takedown of all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support.
If you guys want to grab breakfast after the hit, I don't know if you're near each other or whatever, but that's on me, because you guys are not really on the same page on this, I don't think, and we need to talk it out. Gordon, is what does Gene not see that you see? And Gene, what is he smoking to get to his position on this?
Got to give some major credit here to the host, Joe. Not only is he willing to say what's on his mind, but giving Gordon a smackdown right out of the gates. Gordon the class clown has literally no credibility, yet most hosts in the mainstream finance media will sit there and let him say moronic things about Tesla as if they actually make sense. So credit to Joe where it's due. And there's plenty more where that came from.
Well, Gene, why don't you start? You think Tesla is a market leader? It's going to continue to lead?
I think so, and I think it comes down to consumer preference. There is an affordability question around the price of their EVs. The preference side is EVs obviously are gaining separately. In the pricing side, you have a $50,000 vehicle versus their competitors at largely above $50,000. And the third piece that I would kind of agree with the setup that 2022 is the year of deliveries. The third piece is that they are in a spot where I think that they can deliver over 1.3 million vehicles, up from about 900,000 in 2021.
So apparently the Tesla bull thinks Tesla's looking at delivering around 1.3 million units in 2022. Gene, a few words of wisdom if you happen to be watching. Please stop saying that out loud. You're going to be very embarrassed at the end of 2022. Now, I respect Gene, but I do not respect his numbers. Even in my bear case for Tesla in 2022, we've got 1.526 million deliveries. And let's look at the breakdown. Fremont, a little over 500,000 units. Nobody can argue against that. We look at the production capacity, Model S and X combined, maybe 80, 100 or so thousand vehicles. Then you've got the 3 and Y, that's easily another 400,000. The capacity's already there, and Tesla's told us they're continuing to increase their capacity. Because they increase the efficiency in manufacturing, they can produce more vehicles out of the same footprint. This is a no-brainer. Now, let's look at Shanghai. We've got over 700,000 vehicles produced next year. If you've been playing along at home, you'll know that the numbers coming out of China show clearly that Tesla's capable of producing well in excess of 60,000 vehicles in a single month. This is a done deal. Tesla's continuing to increase capacity at Shanghai as well. The only real uncertainties here are around Berlin and Austin. Now, let's think about this. How many vehicles did the Shanghai factory produce in its first year of operation? Around 150,000 vehicles. And do you think Tesla's learned a few things about ramping vehicles since the Shanghai factory? Of fucking course. This is my worst case scenario. Everything possibly that can go wrong for Tesla does go wrong for Tesla scenario, and we're still at over 1.5 million units delivered for the full year. Maybe you argue, the 4680 cells might slow stuff down, Stephen. No shit, Sherlock, but Tesla has a fallback plan, the 2170 cells. Nothing is going to slow this down except an unforeseen disaster, hence my bear case only a 5% probability of playing out, meaning there's a 95% chance that we're going to have a better outcome than this. The question I want to pose pose to Gene is, where in the flying are your numbers coming from, dude? Seriously, what do you think's going to happen? How are you around 1.3 million units? We've got to shave more than 200,000 deliveries off this number. Where are they coming from? Do we assume that Fremont only produces 400,000 and Shanghai only 600,000, despite the fact that they're producing more than that number already, and they continue to ramp? Or do we assume that both Berlin and Austin are absolute train wrecks? Maybe they only produce 50,000 vehicles for the full year each, about a third the number of vehicles produced in Shanghai's first year. Again, no disrespect here, but Gene, please stop saying that out loud, dude. I'm not even going to show my base case or my bull case for 2022 deliveries, but if you're interested in those, hit the card in the corner or the link in the pinned comment, sign up to Patreon at the investor support level and above, and you'll gain exclusive access to my Tesla valuation model, which includes my production estimates all the way out to the end of 31, bear case, base case, and bull case, plus all the other numbers behind my Tesla valuation, which produces my Tesla price targets, also available exclusively on Patreon to all supporters at all levels.
And just to put some perspective around that 1.3 million, I think that Rivian is going to deliver best case around 70,000. I think Lucid, best case, 17,000. I mean, we're talking about Tesla between those three delivering 94% of the vehicles. I just want to finish with one thought before I turn it over to Gordon, is that that is by definition, there is a definitional losing of market share there. When you are giving up 6% of that. However, I think when you look at the arc of where EVs are going, I still think Tesla's going to be in a great spot in 2022.
Okay, Gordon.
All right, listen, I think that Tesla's valuation is, for lack of a better word, absurd. And listen, so for Tesla at $1,000 to be represented in the valuation, it needs to go from selling roughly 900,000 cars a year to 20 million cars a year. That's what Gene is projecting in 10 years. What that means is that every single quarter, Tesla needs to ramp and build and basically come out with a new factory of 500,000 cars that's completely sold out. Clearly, they're not doing this.
We've got to talk about this. So unless you're completely and utterly brain dead, and I have no idea why on earth I'm showing this completely unrelated tweet from Standstill Capital, Mark Spiegel, I don't know why this is up on the screen, so please ignore that. There is absolutely no way this makes sense. Let me explain. What Gordon is doing here is going, okay, 20 million units a year. Let's divide the number of units per year by every quarter in Tesla's history and then assume that they just ramp their production in a linear fashion, which is completely insane. I've mapped this out. If you're a nerd, pause, look at all the numbers, but I want to just show visually what the difference looks like. The end destination, 2030, Tesla's producing around 20 million units per year, just roughly. The key difference here, in scenario 1, which Gordon is claiming is what Tesla needs to do, Tesla's adding 2 million units of production capacity every year, 500,000 vehicles per quarter. In scenario 2, an exponential increase of 40% production capacity compounded year after year reaches the same destination, approximately 20 million units produced at the end of this decade, but has a very different ramp. And just to be clear, Tesla's going to be increasing their production capacity at a much higher rate than this, at least in the next few years. But just play along at home, we're using a nice flat number, 40% compounded over the decade. Tesla adds a mere 369,000 units of capacity in 22, then 520 in 23, then 733, blah, blah, blah. You guys can see, ultimately, they get to around 20 million units per year. It's not until 2027 in the exponential growth case that Tesla adds more than 2 million units of capacity in a single year, then 2.8, 4, and then 5.7. Again, if you're an actual moron, or if you don't understand exponential numbers, you may go, good point, Gordon, oh shit, man, how are they going to do that? They need more factories. But if you actually look at the numbers and understand how exponential growth works, this makes complete sense. And Gordon is assuming here that Tesla's producing 500,000 vehicles per factory. This is moronic. We know Berlin is going to ramp to 2+ million vehicles per year. Austin's a bigger factory, that's probably 3. So just those 2 factories alone are going to allow Tesla to ramp to about a quarter of their goal. Add 4 more factories at those approximate sizes, and Tesla's done. They've got enough factories, they just need to increase production at each factory. So this argument is completely absurd. But as I said, you need to be brain dead to think this makes sense. Shout out to Mark Spiegel. Did I say that out loud?
So if you assume they do this every 6 months, it's going to take 20 years. By the way, they're not planning a new factory every 6 months. But even assuming they do that, that's going to take 20 years. But you got to discount that back. You know this. You guys know you got to discount it back. Net present value. So people in Tesla stock expect to earn 15% a year. To assume they ramp a new factory every 2 quarters, 500,000 car per year factory that's completely sold out, by the way, which they're not doing, and you discount that back by 15%, you're talking about a $30 stock.
I am so confused right now. Did Gordon just suggest that if Tesla does reach 20 million vehicles per year, that the stock's worth $30 per share today? Did I hear right? I got a funny feeling Gordon is about to receive a well-deserved smackdown, so stick around.
Keep in mind, in China, their market share has fallen from 23% to 11%. They're not leading. They're being outsold by BYD and GM. In the EU, they're being outsold by VW by 2 times. They're not the leader there. And their market share has fallen from 33% to 15%. Keep in mind, in China, VW is expected to sell 2/3, roughly 75% the amount of cars Tesla will sell this quarter, and they're going to surpass them next year. So when you see competition, Tesla significantly loses. So the idea that the valuation today makes sense, again, they need to ramp a new factory every quarter that's completely sold out. They're not going to do this. So their valuation is absolutely absurd. And to say they're more than a car company, 95% of their revenue comes from selling cars. The other 5% comes from a profitless energy division. So they are a car company. So for Jim to try to justify where Tesla sold out today, he needs to explain to us how they're going to ramp a new sold out factory every quarter, which I don't think he can.
A lot there, Gene.
Did anyone catch the poker tell from Gordon there?
Maybe I can start with the market share piece and agree. There are that's facts. There are regions in the world where Tesla is losing share. Most regions they are, just because competition is gaining fractionally. It is gaining. The analogy I would give, I think it's a constructive analogy, is to think about what's happened with Apple. I do think that Tesla does have opportunities to be more than a car company, be viewed as a tech company. And I think the analogy I would put is the iPhone. When the iPhone started, it really dominated the smartphone market. Call it 90% share of the smartphone. Today, the iPhone is 18% of the market. However, that's a great business for Apple. And I think that similar trajectory will play forward with Tesla. Their market share is going to go down. But the market, as you mentioned at the top, we're talking about going from 3% of vehicles to eventually 100%. So maybe just one piece. And
if I were inside Gordon's head, I'd be the only object for starters. And second of all, I might know for sure whether or not that chuckle suggested that he believes that electric vehicles will never make up 100% of the global auto market. But alas, I'm not in Gordon's head. Nothing is. So let's move on.
I don't know if there's a way. I was hopeful, Joe, that Gordon and I would be on the same page on this next topic here. We talk about Tesla's valuation. We think about Rivian and Lucid valuation. I don't know how much Gordon thinks about those. I think Tesla still is a $2,500 stock. I think Rivian and Lucid are going to have some difficulties in manufacturing in 2022. I think they're going to see some stumbling here. But maybe that's a point that Gordon and I could agree on.
Well, Gene, I'm not sure if Gordon is going to agree, because I don't personally believe the things that he says are actually connected to reality or what he truly believes. Not that I'm suggesting he has ulterior motives for saying these crazy things. Just thinking out loud. But I will say, Gene, that I completely agree, and I've been hammering this point home. Rivian's valuation, completely fucking insane. Lucid's valuation, completely fucking insane. All the people who think they're investing in these stocks, completely fucking insane. Or they're in the stocks casino, they're not investing, and they acknowledge this, which in that case it's okay. If they know they're betting rather than investing, no problem. As I've said, I wish these companies well, but damn, they've got a fucking mountain and a half to climb, and they're not even at the base camp. Good luck.
Gordon, you ever wake up in the middle of the night and say, oh my God, I've hated Tesla since 50 and it's at 1,000? Do you ever think, wow, I need to revisit some of my the way I think about things?
Great question from the host Joe here. Can you guys smell that? It smells like roast Johnson.
Yeah, Joe, I want to be clear. I don't hate Tesla. I just think the stock is grossly overvalued.
But
and again,
you thought it was overvalued
to
at 50. When did you first think the stock was overvalued, Gordon? Because maybe you shouldn't be thinking about stock valuation.
We initiated Tesla in late 20.
Ladies and gentlemen, grab your plates and cutlery, because we are about to dine on some barbecued Johnson. Joe is about to unleash and absolutely roast Gordon. We heard Joe there initially suggesting, Gordon, you've been kind of wrong on this stock. Maybe you should just give up on trying to value stocks. Have you considered that? And there's plenty more where that came from.
Yeah, we initiated Tesla in late 2018.
Well, this is technically true. JLJ Research, the sham shop, did I say that aloud? I don't mean that. The legitimate research firm was only founded a few years ago. Prior to that, Gordon Johnson working as an analyst for another company. I don't know, maybe he got fired for being bad, or I don't know, maybe somebody dropped a big pile of cash in his lap and said, hey Gordon, I've got an idea. Come with me. I don't mean any of that. Do your own research. But I do want to provide a little bit of context, because Gordon has been bearish on Tesla from day one. Here's a gem from CNBS more than 8 years ago in late 2013.
Gordon Johnson, in your view, where should be valued at right now? I think Tesla's a $50 stock. Essentially, people are valuing this car, again, based on a Gen 3 model for which there is no prototype. Tesla's cars cost about $80,000 to $90,000 right now. They're using essentially laptop batteries. They're packaging Panasonic laptop batteries into these car batteries, which are effectively the bulk of the cost. How are they, those batteries have been scaled up. How are they going to get more costs out of that? I don't know. I think the stock is grossly overvalued. I think the correction is not anywhere near done, and I'm selling a stock.
So as Joe continues to rightfully roast Gordon Johnson for being completely fucking wrong about Tesla on air, just remember, he's been wrong about this company now for almost a decade running. That is quite an achievement. Round of applause for the class clown.
At $300, the stock fell to $150. Elon Musk did the funding secured tweet. It went up to, I think it went up to close to 400. Then it fell back down. And then we had, quantitative easing from the Fed. And every single asset blew up. Listen, Tesla, I think Gene and others have said previously that Tesla leads in autonomous technology. It couldn't be further from the truth, right? We know that GM, via Cruise, and Waymo have robo-taxis on the road right now. You can look on YouTube at Tesla's quote-unquote FSD technology, driving directly into the lane of other cars, driving into pedestrians. You'd have to be blinder than Stevie Wonder not to see that Tesla lags from that perspective. So that's really, in our view, a legal risk, but they don't leave there. So listen, I know the stock price is up a lot. I think that, Tesla's Chinese factory, we need to see the financials on that factory, because I believe that the costs of that factory are back and loaded, and I believe making electric cars is significantly loss-making for the company. And I know the stock price is high, but listen, the facts are they lose significant share. They're going to grow their units about 35 to 45,000 cars this quarter. But to justify where the valuation is, they need to grow 500,000 cars per quarter, which means they need to ramp a new plant every single quarter.
Right. Hey,
I'd like for Gene to explain how they're going to do that. So listen, I know the stock price is high, but reality is going to set in when all this free money exits the market. I think that reality is going to be ugly for Tesla.
It may, Gordon. I don't know. Now, 2018, it wasn't at 300, unless you're using pre-split numbers or something. It looks like it was way below that. I'm just wondering, let's say that 5 years from now, Tesla is still a viable company, still doing well. And let's say it's like near Gene's target at 2,500. At that point, would you say my analysis didn't take into account everything else that it should have taken into account for the stock price? I was right about fundamentals. I was right about this. But whether it's the Fed or whether it's greater fool theory took over, whatever it is, at that point, would you say, wow, that was like the worst stock in the world I could have been short for 5 years?
Listen, I don't want to say if it's going to go to 2,500. Here's what I'll say. Listen, valuations matter, and we're seeing that in a number of these meme stocks, which I think Tesla is the biggest. For Tesla to be at $1,000, they need to sell 20 million cars a year. And even at that price, right? Toyota sells about 10 million cars a year. So even at that price, it's still overvalued by about 100%. I'd like for anybody to explain to me how Tesla's going to go from selling 1 million cars a year or 900,000 cars a year
Gene, can
to
you
20
do that?
million cars a year.
How are they going to do it, Gene?
I'm on a totally different Excel spreadsheet here.
Oh, okay. Never mind.
Perhaps I think that the numbers that Gordon has his numbers, I respect those numbers. I'm on a different page about how many units they need to add. If they go from 900,000 vehicles in 2021 to 1.3 million, call that just under 50% growth. I think that will continue to move the market cap higher. That's less than that bogey that Gordon has laid out. And so my response to Gordon's question about, how do they get there? I don't think they need to be at 20 million cars in 10 years. I think they can get there over time, but I don't think they need to have that kind of, I forget what the number was, 500,000 additional vehicles per quarter. I'm just on a much different page.
Gordon, you always, you bring it, and you got numbers and facts behind everything. I just, we'll see. No one knows what the future holds. Gene, thanks. You guys
Thank you.
There was an old Simpsons episode, and two people were on like CNN, like Ann Coulter and some total left-winger, and they left the set. They went, that was great, and they give each other a high five, and they head off to like lunch together. Like it's all. That's what I was kind of thinking you guys could do maybe, but maybe you're not close enough. Who's buying? Gene might have more money.
And there we have it, folks. The final hammer blow from Joe roasting Gordon Johnson live on air there. Well-deserved roasting, I must say, suggesting that they should go out. Who's buying lunch? Well, Gene probably has more money, a.k.a. because you've lost all yours shorting Tesla stock, you fucking idiot.
Who's buying? Gene might have more money.
I'm in
I'll
Germany,
be
so
buying.
I don't
I'd
know
love
if
to
I
buy
can fly back
Gordon.
to New York that quick.
Oh, okay. Probably not. Probably not, Gordon. All the flights are canceled. Anyway. Thank you.
So I hope you guys and girls have enjoyed this video. I wanted to feature this because it's great to see somebody finally in the mainstream finance media calling Gordon Johnson out on his bullshit and completely roasting him as he well deserves. And just for the record, I can't always say exactly what I think about Gordon and other issues here on YouTube. I have, however, discussed him at length in my exclusive Patreon Q&A, so if you're not already on Patreon, hit the card in the corner or the link in the pinned comment to sign up. You'll gain access to over 100 exclusive Q&As plus my Tesla price targets all the way out to 2031 and loads more. In conclusion, I'd just like to say 1, don't bet against Elon, and 2, do bet against Gordon. And don't forget, if you'd like your own Don't Bet Against Elon merch, there's a variety of designs including phone cases, shirts, mugs, hoodies, long sleeves, sweaters, and plenty more. Check out the card in the corner or the link in the pinned comment, and I'll see you guys in the next video. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.